kick it off, and I did press record, Hayden. Uh, anyways, Keely, appreciate it. Thank you.
Yeah, absolutely. Well, it's great to see y'all. Huge thanks to Dustin and Hayden for having me on. I really respect what these guys do and the fact that they put together some cool meetups like this in the midst of all their acquisitions and operations is very respectful. So thanks for having me on. Quick intro on me. I'm a serial sales gal. I'm one of those crazy people who love sales. And most people hate sales and hate salespeople. But I've been doing this for 18 years. And, when I got into sales and when my career took off in high ticket sales, and I say high ticket, that just means it requires a conversation to close a deal. When my career took off in that space, it was really because I rewrote sales. Like I couldn't stand the typical sales approach. I never wanted to come across like that. It made me feel cheap. And so I was like, I got to figure out a way to sell that is not the typical approach, like overcoming objections. I don't ever want to feel like I have to overcome an objection or sell somebody. How can I get in front of it? How can I prevent the objection? How can I have a real, raw, honest conversation with people about what their challenges are, if this is the right fit or not? And so I just figured out a way to sell that made me proud and built a pretty big career in that space, in the financial education world, mostly in the financial markets. So stocks, futures, Forex options, we taught people how to trade. I grew up in a family of professional traders. And so became VP of sales for that company. And it was a wild ride and managed over 600 salespeople, which are crazy by themselves, a lot of, a lot of entertainment, but had a lot of fun there. And then got into raising capital around 2011, got into transition from the financial markets of like options and bonds into multifamily and commercial real estate, and just how I met Dustin. I met Dustin like many moons ago. I don't even know how many years it's been, but love the commercial real estate space, made a lot of friends there, and then got into vineyards. So you can syndicate anything, right? If you can find a really cool project that tells a great story that investors want to be a part of, you can raise money for it. So we're one of the largest vineyard operators in the state of Texas. It's a company called Texas Legacy Vines, and we just have 1,000 acres of wine grapes, and we just sell wine grapes to Texas wineries, which is a lot of fun. And now I'm raising for a tech company. I'm in the middle of a $20 million raise right now. So I don't just teach this stuff. I'm in the trenches with y'all. I've got some cool war stories of raising capital that I'll be happy to share with you. But that's my goal today, is just to have a good time, make sure we have time for questions, and give y'all some stuff that you can actually take away and, and learn, like implement in your next conversation that makes you feel encouraged and proud about your business. Because what I found is that most fund managers, syndicators, operators that I talk to love this business, but they hate the sales aspect of it. And they never really found a methodology that they could follow or things that they can say that feels true to themselves, right? None of us want to be the sleazy salesperson. So what I will tell you out of the gate is that I am a straight shooter, 7th generation Texan. I don't sugarcoat anything. So hopefully y'all are okay with that. If I just kind of give you some strong opinions that I have around this space and about capital raising, because I want y'all to be set up for success. I'm kind of known as the person that tells you the things that you don't want to hear. So that's what we're going to start with. So we can set a good framework of what's not working in capital raising and what do we really need to focus on. So a lot of people think that they've got to build this massive list of investors. Yes, it's great if you've got 10,000 investors. That's amazing. I have a pretty big player in the multifamily space that is a client of mine that's got over 25,000 investors on their list, and his team, investor relations team, is struggling because they don't really know their investor list, and it's not their fault. They built a huge business, got a big following. That's amazing. But the number of investors on your list doesn't always translate to the capital that you need. So I don't want y'all to think like, oh, I've made it when I hit 5,000 investors on my list. One of my clients raised $21 million with a list of around 400 investors. He knows them really well. And these are investors that can write checks multiple times per year. He's got a great relationship with them. So I want y'all to focus on the quality of your relationships over quantity. This is one of those things that I probably get in trouble for at some point, but I don't care. I'm 40 now. I think when you hit 40 years old, you just don't care anymore. Marketers have attacked our industry. So there's a lot of marketing pitches out there that are very tempting of like, hey, and I get these messages in my LinkedIn inbox too. Like, hey, I'm going to sell you a list of accredited investors, or I'm going to set you up with 15 accredited investor calls per week. And I have clients that have spent a lot of money and have done this and came to me afterwards. And they're like, this isn't working. So I'm not saying that some of these strategies aren't a piece of the puzzle. It's just none of them are the absolute answer. It's not like the golden ticket to capital raising. There's a lot of things that have to be at play for this to work over time. Private equity and family offices, they're great. It's great to know them, right? They're bigger check writers. I personally don't love raising money from them. I've met with a lot of these firms. I've pitched in New York City, and I'm talking like real private equity firms, like the big ones, Madison Avenue, 30th floor, floor to ceiling windows, the glass. And in my mind going into this, I'm like, this is never going to work, but I'm going to do it for the experience because they want to control your entire deal. They drive your splits down. There's just a lot of things that you have to give up when you take those bigger check writers in. I wish that we could raise with emails. Dustin and Hayden go back to the heyday of commercial real estate where we could send an email and like our deal's funded, right? In 2 weeks. We're just not in that market anymore, right? Y'all love Wizard of Oz. Like we're not in Kansas anymore. We're not in that market anymore. And it really requires relationships, and people's inboxes, our investors' inboxes get inundated with emails. They all start to look the same. And so we have to make sure that we're standing out, and your emails can definitely support your raise process. They're a necessary part of it, but they can't replace it. And I'll give you an example. So I've raised for this tech company. It's a stealth AI startup. And the way that we had to raise, so I've raised 28 million for it, close to 29 now. We could not tell investors who the founder was, what the real name of the company is, who the leadership team is, because they were in stealth mode, getting patents, getting regulatory licenses. And so we weren't allowed to send out slide decks. We weren't allowed to send out emails. Like it was literally, who do you know? If you can pick up your phone and call and have a conversation with them and say, hey, the only way that you can view this opportunity is live in like a virtual call or in-person dinner. And we raised a lot of money that way. It was hard, right? It was a lot of work, but it's proof that the emails just support the process. They don't replace the capital raising process. So we got to talk to investors. How many of y'all would love to hear that you don't have to have 45 blog posts? Does anybody feel like a little overwhelmed with content? Let me know in the chat. Just drop a yes in the chat if you're like, I don't really want to write another blog post for the rest of my life, because that overwhelms me too. You don't have to do that, right? It's like there's a lot of marketers that say you got to have all this content. Great, right? We can do a really cool FAQ page. We can create some cool PDFs, but I'm telling you what raises the money is conversations. And I know we love AI. We love to automate. I think that stuff's important, but you cannot automate the entire capital raising process. I'm sorry to tell you that. I could probably make a lot of money as a coach if I promised you that we can build you a fully automated capital raising machine. And you're like, cool, all I have to do is plug investors into it and get their emails and I raise the money. It sells to our ego. Our ego wants the easy button. I'm telling you right now, you're going to waste a lot of time, a lot of money. You're going to get frustrated. And I want you to think that there's something wrong with you if that's not working. There's nothing wrong with you. It's just raising money requires relationships. It requires conversations. I'm an old school raiser in that regard. It is conversations with people. And, I've been doing this since 2011. And I will tell you that I do love some automations to support things, but I would much rather talk to people. So, and y'all probably seen the Field of Dreams. If you build it, they will come. And sometimes we spend $20,000 with a marketing company. We build it and it's beautiful and it's like crickets. So what matters over all of this is conversations. Conversations equal capital. The more that you are on your phone during a raise, you are texting, you are calling, you are talking to your investors, the more money you're going to raise. And those emails are going to support the process. Your live webinars are going to support the process. Pretty pitch decks, all those things is going to support the process, but the money's going to come from your phone, from text messages, from phone calls. And I think most people avoid those because they don't know what to say. And they never want to feel like I'm calling an investor and I'm asking for money. How many of y'all have ever felt that before? Type that in the chat. You hesitate to call investors because you don't want to feel like you're the sleazy salesperson that's like, hey, you got a deal for you. Has anybody ever felt that way? Drop a yes in the chat. Let me know I'm in the right room. Oh, there's people and friends in here. New friends, names I've never seen before, and people that I recognize too. Awesome. Hi, Amanda. All right, well, let's dive in. Actually, Dustin, I never asked you, how long do we have? Because you're going to like
till
grab
one. Might be good to do Q&A last 15 minutes or so.
Okay, perfect. I'll keep an eye on the clock. All right, so I'm going to give you 4 tips. Take a lot of notes. The first one, and probably the biggest question that I get, is where do I find these investors? And here's another thing that you don't want to hear, but I'm going to be that girl that tells it to you like it is. There is no like golden nugget place to find investors. It's like a gold mine. Like they're all hiding in this one spot. They're everywhere. And what I want you to realize is that capital raising is a lifestyle. It's not something that we do on like Tuesdays and Thursdays from 11 to 2. We do it all the time. It's the willingness to talk to strangers. And a lot of people are surprised by this, but I really don't like networking. Like Dustin asked me if I was networking. I don't like networking. I'm just being honest with y'all. Like I've been in sales for 18 years, and my own coach years ago, he was like, if you don't talk about your business, you won't have one. I was like, okay, got it. Right. I got to network, but it's a drain on me. So I'm an extrovert, but I'm kind of like an introverted one, right? Like if I'm in a room full of people with a bunch of strangers, I'd be perfectly fine with a glass of bourbon just by myself. Like, don't feel sorry for me. I'm not a big networker, but I've realized if you're not willing to talk to strangers and look friendly and look pleasant, it's gonna be very hard to raise capital. So are there any introverts in here? Tell me in the chat. Yes, Chirag, like opening your trench coat of deals. We never want to feel like that, right? We don't want to feel like the price is right salesperson. Okay, so the good news is if you're an introvert, yep, Amanda says introvert, I hear you. You know, it's interesting, a lot of introverts come into this space because y'all are incredible at like details and spreadsheets and analyzing, but you don't want to deal with people. So the good news is you can be an introvert and you can raise a lot of money. One of my top sales guys, when I was a VP of sales, he drove so much revenue out of the Atlanta campus, was an introvert, but he learned how to be a chameleon. He learned how to turn it on when he needed to. He was really good one-on-one with people. So you can be very successful raising capital and in sales being an introvert. We just got to learn how to talk to people. So social media is great. If you're not raising money from LinkedIn, what are you even doing? Okay, there's a lot of money on LinkedIn. However, I think everybody's tired of hearing like, get on LinkedIn, they're going to raise millions from LinkedIn. You can raise a few million from LinkedIn. You can, absolutely. It's a lot of work, and it's kind of like you're searching for this little tiny golden fish in this massive ocean. And it's harder to find people online than it is in person. So yes, you need to do LinkedIn because it's social proof. People are going to look you up. You are who you say you are. They're going to Google your name, and a lot of LinkedIn stuff is going to come up. So it's important that you're active on social media, right? And that there's proof that you are that person. So it's great, but I like to call it secondary lead generation. I want you instead to build your golden Rolodex. So what is the golden Rolodex? Well, these are people that are in your local market. So most of you in here probably live in a major metropolitan area. I've only ever had one client that lives in a tiny town with like 6,000 people. That's a challenge. Right? We got to get to the big cities, and we got to get into our own backyard. People ignore what's in their local market. So we're talking about LinkedIn. LinkedIn is a great way to find people that are in your local market, like by their exact title, their job, what they do. If I were to start over from scratch to build an investor community, I would go look for VPs of sales, chief revenue officers, VPs of marketing, and chief marketing officers in Dallas. And those are the people that I would find on LinkedIn and I would connect with, and I would start building relationships with, because I was that person. I know what their pain points are. I know why they don't have time to look at their investments. I'm one of them. It's not scary. We're both local. So LinkedIn is a great way to kind of zero in and find those people. But we have to get out from behind our computer at home. We got to put on real clothes, and we got to go out there. We got to talk to people. So it's not always networking events. Like networking events are great, but I have found and built a golden Rolodex of people. And this golden Rolodex is, they're not always investors. Oftentimes they are influencers in your local market that know a lot of people and will make introductions and connections for you. So are we building that golden Rolodex? Well, where do you find these people? Nonprofits are a great place to start connecting with people who are big influencers in your local community, right? The movers and shakers that know everybody. Your private clubs. Now, I'm not saying you got to go out and spend 100 grand on a golf membership. If you love to play golf, do it, right? But I don't really like golf, and it's really hot in Texas, and you will die out there in the summer. So I'm like, I don't want to play golf, but I can join some social clubs that are pretty, minimal on the cost to be in the environment, to be in the room. One of these clubs that I was at, just remote working, right? I'm there, I'm working on stuff, but at least I'm in the environment where other people are, and it's 4 o'clock and people head to the bar, and we start, talking to people, and you start meeting some very interesting folks. And I met a guy who is on the private wealth side of JP Morgan, and he invited me to one of his family office, invite only type of events, and met a ton of investors at that event that are not family office, individual, high net worth investors. And so you can find these people. We would just have to get out there, and we got to think, where do wealthy people hang out? I would rather y'all start building your golden Rolodex of people that can invest in your deals multiple times per year, right? You bring them a deal, they can write 2 or 3 checks a year. That's your wheelhouse. Or if it's not right for them, they can start opening up their own golden Rolodex and introducing you to other people. They're great for that. So when I say, like, I have people on my list that are not investors, but they have introduced me to a lot of really good investor networks. So it's not a perfect science. So if you're an engineer type personality, that's going to frustrate you. It's more of an art of kind of finding these people, but you're going to find that one coffee conversation leads to the next, and they make introductions for you. I was invited to this woman's home who's a senior executive at Amazon. She brought in a celebrity chef, and there was 12 people there, and myself and my business partner were like, how did we get to this table? And these are like big players, right? The chef is an NFL player's wife, like, and these are all potential investors, but it just came from being willing to talk to strangers and building relationships and building your business on coffees and lunches. I'll give you a funny story because I didn't plan on this, but again, it's been training that muscle of being willing to talk to strangers. I met an investor in the ocean in the Caymans. Okay. So I was in the Grand Cayman, out in the ocean, right? Just like hanging out. The water's like completely still there. So they're just everybody kind of talking to each other. We were at a really nice resort, and, I look over and this woman smiles at us, and they're not too far away, right? Because everybody's just out there with a cocktail hanging out. And so I smiled back and I'm like, hey, and she's like, hey there, like, such a beautiful day. I'm like, oh my gosh, I know. Right. And we just start talking. I'm like, where are y'all from? She's like, we're from Dallas. I'm like, no way, we're from Dallas. And she's like, I said, are you here for the conference? And she's like, no, we just, oh my gosh, this is Justin, right? And she like introduces him. She's like, my husband's been like working like crazy. We just needed a break. I'm like, oh man, that's awesome. What do you do? He's like, oh, I work for American Airlines. And so like, man, we have a bone to pick with you about our flight. We're like, we're just kidding, right? And so we just make some like humor around it. And then, so Justin tells us what he does. And then we're like, Sabrina, what do you do? She's like, oh, I'm an attorney. Like, oh, that's amazing. Like, what do you practice? She's like, private equity. Wow, interesting, right? Who would have thought in the ocean, you meet somebody who's an attorney in Dallas who's in private equity. And so we're like, wow, that's amazing. So we start asking questions. How'd you get into that? How long you been practicing? Like, what are some of your favorite law work that you do? Just showing genuine interest in people. The law of reciprocity kicks in, and they return the favor, and like, oh my God, we've been talking about ourselves. What do y'all do? It's like, oh, we're in the investment space. And we start telling them about some of the deals. We were in the middle of raising for this tech fund. So when we get back home, long story short, meet her in the ocean 3 weeks later, a few $100,000 invested in the deal, right? So that's what I mean by be willing to talk to strangers. Why is LinkedIn so valuable? Because it's not awkward when we go, to dinner that night. I'm like, let me go find her on LinkedIn, because you're in the ocean. It's not like we can exchange business cards or phone numbers. And she's like, you're going to be in the ocean or at the pool tomorrow, or the beach or the pool. Like, oh, we'll be back here. So we saw her again. She's like, hey, I saw you connected with me on LinkedIn. She's like, I want to hear more about this deal when we get back. So when I get back home, I send her a message on LinkedIn, send her a voice message. Hey, Sabrina, I want to make sure I didn't drop the ball. I'm sure you're swamped with getting back from vacation. We are too. We've got a webinar coming up next week. Let me know if you want to hop in it. And that was it. It was just a very like low key conversation, but a few $100,000 invested in a few weeks later. I'm not saying all your conversations are going to go like that, but it's the willingness to talk to strangers, the willingness to meet those people. My last point in this, which I could probably get in trouble for too, but I don't care. It may sound shallow, but it doesn't matter to me at this point. You have to look the part. If you're going to talk to high net worth investors, you have to look the part. And I think that some people might say, well, this sounds shallow, or like, they shouldn't judge me based on how I dress or what car I drive. The truth of the matter is they do. And that's what most people don't want to hear. And most people don't want to say. So if you are not in the car that you want to eventually drive, or maybe you don't like cars like that, it's not one of your things. Well, just, maybe don't valet, park your car in the back of the lot and walk in, put on your best shoes, put on your best watch, right? Grab your best handbag for the ladies in here. I think this is the stuff that nobody talks about, but it's extremely important. Investors have to look at you and think, okay, he deals with other high net worth investors just like me. Like, that's my person. She deals with other high net worth investors just like me. And when I say high net worth, I found the wheelhouse, this is just my own personal opinion, is like that $5 to $15 million net worth range. Once they get above that, and like 20 million, 30 million, 40 million, they really don't care at that point. You're getting into the place where they probably have a mini family office. They've got somebody managing their wealth. They don't want to deal with another K1. So that sweet spot is that kind of $5 to $15 million range. I have a billionaire, I told Dustin Hayden this, that's upset right now because I won't let him in this tech deal. Why? Because he's a jerk. So I'm not saying that all people like that are rude, but sometimes when they get to that level and they have that amount of wealth, they want a board seat. They want operational control. They want 95% of your deal. We're not changing our splits. You're not redlining our PPM. We're not changing our fees. You're not getting a board seat. You're not getting operational control. This is truly a passive investment. So you also have to hold the line and be confident in knowing that some money is too expensive. This guy could write a check and fund the whole thing. We're trying to get 20 million in before Thanksgiving. He could write the check, but I'm not willing to make concessions and let him redline our PPMs and, be demanding. And he's used to getting his way because that's how a lot of these bigger check writers are. So I just want y'all to, and I've been raising from retail investors for a very long time. That is my sweet spot. I want to have investors that come into my deals that it can really make an impact on their life. I'm not here to make the rich richer. That's a personal opinion, but I'm just trying to give you that sweet spot. When I say high net worth, I'm not talking ultra high net worth, 40, 50, $60 million. Okay. Those can be a little bit more of a headache. We're looking for the people that are still building their wealth and are hanging in those circles with people that have a lot more money than they do. All right. Are y'all with me? Just give me a yes in the chat. If you're still here, you're not glazed over. I'm looking at your faces. Your handsome and beautiful faces. Okay, good. All right. Let's move on to number 2, the golden sales rule. I know I keep saying there's no such thing as a golden nugget or a gold mine, but there is a golden sales rule. And this is something that's so crucial that you understand, because most people, when they get into sales, traditional sales teaches that if you are really friendly, you're outgoing, you're nice, you get people to like you, and you know your product really well. In our world, our product is our investments. And if you talk to enough people, then you're going to make a lot of money. And this is exactly why people quit sales. It's why they don't survive in capital raising, because they believe this old school sales methodology. So here's the good news. Sales has not changed for decades. How many of y'all have had a bad sales experience in the last month? Like just a salesperson that you've dodged. You're like, oh, here we go again. I got one texting me on my phone because I made the mistake of calling the car dealership to ask a question about a tax play before the end of the year. And he's like, hey, did you have a chance to talk to your CPA? And I'm already like, walls going up, right? Because it's typical sales approach. So that's the good news, is they haven't changed, which means you will stand out in the best way possible with all of your investors. You'll be a breath of fresh air because you're not going to approach them that way. But you have to understand the golden sales rule. The golden sales rule is no pain, no sale. No pain, no capital. So no pain, no sale is what I've been teaching all the way up until I started teaching. Teaching capital raising. It's the same thing. No pain, no sale, no pain, no capital. No compelling reason. They're not moving money. If they're making 25% year over year in crypto, why are we trying to convince them to get into a multifamily deal? If there's no pain there. You hear people say like, oh man, you're so good, you could sell ice to an Eskimo. That means you're selling stuff to people that don't need it. It's just an uphill battle. I would rather find people that have the problems that I fix. It's a lot easier to raise capital from people that have the problems that you fix. So what are the problems that we fix? They are frustrated. I want y'all to hear these pain words. They are frustrated with the stock market. They're tired of, that's another pain word. They're tired of the stock market roller coaster. They're feeling anxious about the economy. They're confused. Another pain word. They're confused with the headlines. Are we going into a recession or are we not? Is the stock market going to crash before the end of the year, or is it going to rally? They are overwhelmed with where to start. They know they need to diversify, but they're overwhelmed with private markets and where to even begin. They are sick and tired of, that's a phrase, sick and tired of the IRS and paying huge amounts of taxes to the IRS. Those are the problems that we solve. So we have to be talking about those problems, not about how amazing we are and our company and all the things that we do. So you've heard like the 30-second elevator pitch, right? Every sales training, every business conference is like, what's your pitch? And when I do go to networking events, I went to a small one where it was a curated group and it was probably 20 women, right? Board style. We went around and everybody did their 30-second elevator pitch. And it was just like a flip switched, and they just were like, went into robot mode about their background, and everybody just starts tuning out. Why? Because it doesn't pull me in. It doesn't apply to me. People don't care about us. They don't care about how big our portfolio is. They don't care that we've got, 8 properties across the Southeast region of the United States, 3,000 units. All that stuff sounds fun to say, the stats, but people don't care. All they care about is, can you fix what's broken? And they're not going to listen to you until you hit on one of those pain points, what they're frustrated with, what they're tired of, what they're anxious about, what they're overwhelmed with, what they're hoping for. That's what draws them in. So most salespeople fall into the trap of what I call product vomit. And we just meet somebody that's really nice and they're like, what do you do? And then we just vomit, right? How big our portfolio is, how we solve their problems. We use jargon they don't understand. We say multifamily. Most people don't even know what that is. New investors that maybe are not in this space yet. I had somebody, one of my clients was like, I said multifamily by mistake and somebody thought I ran a nonprofit. And I'm like, it's jargon, right? It's our world because we're in it all the time. They don't know what it means. We need to say apartments. Syndicator. What the heck is that? They don't understand what that means either. So when we describe our business, we don't want to sound like, how many of y'all have seen Anchorman? That's like one of my favorite movies. I just watch movies that make me laugh. But y'all remember on Anchorman when he's like, I don't know how to tell you this, but I'm kind of a big deal. And he's like, my office smells of mahogany. Like he goes on this whole monologue, right, about how big of a deal he is. That's what most people's elevator pitch sounds like. So if we want to draw people in, it's so important that in how we introduce ourselves, it's pain focused. So if somebody were to ask you, oh, what do you do? I'd prefer that you say, I run a private investor community, right? Or I own a private investment firm. If you're going to add an asset class in there, you might say apartments. While you're in the chat, how many people are in here? There's like 34 of y'all. Type in the chat. What do you raise money for? Oh, good, Monica. I'm so glad you like Anchorman too. What's your asset class of choice? Some of y'all I know are raising for a few different things, but type it in the chat. Multifamily apartments. Yes, love it. Bruce, thanks, Bruce. Conrad, appreciate that. Jim, Mary. Yeah, okay. So a lot of multifamily peeps in here. Oil and gas, ground up development. Yeah, Charles, do you know what that is? Multifamily, exactly. Okay, so y'all get it, right? So I'd rather you say I run a private investor community or I run a private investor firm. And I typically help, okay, or the people that reach out to me and ask for help, there's a lot of psychology in how you say that. The people that reach out to me and ask for help are usually very successful business owners. Now I'm going to tweak that based on who I'm talking to. So my goal in any networking event is just to be the most charismatic communicator in the room. How many of y'all have seen the movie Hitch with Will Smith? Remember, he's like this exclusive private dating coach. Y'all remember how like scarce he is? Like you don't know about him unless you know about him. His business card, it's even hard to get that, and his phone number. I used to play this all the time in big sales conferences when I would teach sales trainings. There's so many sales lessons in that movie. But I want y'all to be Hitch, right? Like where you're not out there just blasting what you do to everybody that will listen. You're the most charismatic communicator in the room, and you're truly interested in people and who they are. When I was at that investor dinner, my business partner and I were like, how did we get here in this woman's home with all these high net worth people and the celebrity chef? I didn't go in there telling them what I do. I just tried to meet as many people as possible. It was a small group before we sat down for dinner, showed genuine interest. Like, what do you do? How long have you been doing that? That's amazing. So everybody knew who I was. I didn't have to tell them that I'm a vineyard operator. In the middle of the dinner, Danielle, the woman that was running this dinner, she said, y'all don't know this, but Keeley owns vineyards. And everybody looked at me and they're like, what? I'd rather have somebody else say that than me have to go out there and blast and try to prove myself and tell everybody what I do, especially in these higher net worth circles. You're going to run into these people multiple times. So it's better that you are getting them to talk to you, showing genuine interest about what they do, why they love their business. There's some of my favorite, like, how did you get into that? Oh man, that's crazy. You're always going to find a window to mention what you do. So if somebody said like, they're in something like supply chain, right? I might say, oh man, that like, I remember this was happening when we were in the middle of a vineyard development. We buy a lot of steel for vineyard operations. And this is back when we were concerned about steel going up or the price of it and tariffs and everything else. And he was like, I'm in supply chain. I'm like, oh man, that's incredible. Like, tell me more about that. How long have you been in that business? Asking a bunch of questions. And I said, I'm curious what you're seeing on the supply chain side. We're in the vineyard development space and we buy a lot of steel, like a ton of steel. And so we're a little bit concerned with what might be coming down the way. And it sounds like you're an expert in that space. Like, what are you seeing? That's just my little way of like dropping a little nugget of what I do, but I'm not going into my whole pitch and product vomiting all over them. They will eventually ask you what you do and then say, I run a private investment community. The people that reach out or the investors in our community are usually very successful business owners like yourself. Now, what if they're not a business owner? What if they're a doctor, an attorney, say very successful professional like yourself? A lot of physicians, a lot of attorneys that reach out, just people that are overwhelmed with kind of where the economy's at. They're frustrated with the stock market, right? It's a wild roller coaster ride. A lot of them are feeling a little bit nervous about the economy and, you know, what could be coming in the coming months, and feeling the pressure of needing to diversify a bit. They love private markets. They don't have the time to deal with it. They just, you know, want to passively invest, and we help them do that. And we do it through a couple different asset classes. We buy apartment complexes, like cash flowing type deals. We do oil and gas stuff. We do some really cool tech startups, but we handle all the headaches. My operational team, they get to enjoy just passive returns. Some people call it mailbox money, save on taxes. We have a ton of fun. We got a really cool investor community of physicians, right? If I'm talking to another physician. And the goal is those words, tired of, frustrated with, nervous, anxious, overwhelmed, is going to pique their interest. Now they're listening because you're talking about something they're struggling with, they're dealing with. And they're going to say, well, tell me more about that. How does that work? That's how we get people interested in what we do. It's got to be all about them. It can't be about our company. They will see that you've got a big portfolio. They will see that you've got a track record. They will see that you partner with really good operators. But we don't need to throw all that information out there up front. The minute we start doing that, we start triggering them into what I call the buyer system. And the buyer system is a system that every consumer out there has created to deflect and shield themselves from salespeople. And there's 4 steps to it. First step is to lie. The second step is to ask a bunch of questions and get free consulting with no intention of doing anything. The third step is to tell another whopper, as we call it in Texas, lie again. The fourth step is disappear. And I do this with salespeople, and y'all probably do too. And it's okay because salespeople suck, most of them. So most of your investors are in that frame of mind when they think you want something from them. They're like, activate the buyer system, right? Tell a lie. Let me ask some questions with no real intention of doing anything about it. Let me tell another lie to push them off a little bit, and then let me ghost them. The only way that we can break through that is by doing the exact opposite of what they expect from salespeople and what they've experienced in the past. Your first conversation with an investor shouldn't be to tell them all about your company. It's to figure out what's their compelling reason. Is there a compelling reason strong enough that will make them go through the process of sticking with you until you find your next deal if you're not in the middle of a live opportunity, sign docs, wire funds, you know, learn the asset class? Is there something sticky enough? If they're making 25% a year in crypto, that's not sticky. We got to figure out what the challenge is. And I've had investors like this that have reached out, like, oh, I want to hear about this vineyard thing. My wife and I, we love wine, you know, and I'm like, oh, yeah, find out what they invest in. Like, oh, we're in crypto. I'm like, man, how's that going? That's amazing. Never bash the competition. Competition could be another asset class, could be another operator, could be a brother who's a financial advisor. Never talk poorly about whatever it is that's competing against your investment. In this case, it's crypto. I'm like, man, crypto is a wild ride. I haven't really gotten on that bandwagon yet, but it sounds like it's amazing. What do you love about it? And he's like, oh man, we're doing amazing. We're doing like 25% per year. And I'm like, that's insane. That's incredible. And I ask a few more questions and I say, John, I got to ask you a question. Can I just be really blunt for a second? And he's like, yeah, no, of course. I'm like, you're making a ton of money in crypto. Like, why in the world would you want to explore agriculture? Right? It's like, it's not as exciting as crypto. It's going to take a few years to stand up a vineyard. There's no cash flow for 4 years. Like, it'll cash flow for decades after that, but it's not as exciting as crypto. Like, what made you even want to reach out and talk about it? And then I start to find out what's really going on. Well, you know, we have lost some money in crypto and we're nervous. We have too much exposure. Now I'm getting to a compelling reason, but I have to get to that point, my first conversation. So if y'all need to have multiple conversations with your investors, leave yourself room to do that. Where they're not on like this conveyor belt where it's like, meet an investor, pitch them, pull up a slide deck, tell them everything that we do, add them to the email list. All right, next. That's not a real relationship. So if we need to meet with them a couple times, that's fine. But that first conversation, real rapport and trust is built in the questions that you ask, because nobody else is asking them these questions. They're just product vomiting about their company. The reason I have a doctor on this slide is to remind y'all that we don't want to commit sales malpractice or capital raising malpractice, which means we're prescribing solutions without fully understanding their problem. We have no idea what they like about their investments, what they don't like. Do you know what their risk tolerance is? Do you know what their expectations are as an investor? You're just looking for a check. If you've been in this game long enough, my veterans in here, you know that there's some investors that you're like, man, that was a mistake. They're not cut out for this. If I could write a check for these 6 people, right, and release them back to the industry in love, right, in a nice way, I would, but some money's too expensive. So we have to ask a lot of questions. We got to qualify them. We're not just We're not just sales monkeys here to take checks for anybody that's willing to write it. I want y'all to picture and think of your business like I say magazines. It's crazy because it's so hard to find magazines anymore. But if y'all remember Barnes and Noble, I love the magazine section. I used to buy stacks of them. I don't know why. I love like paper stuff. And I buy these magazines and like the high-end luxury magazines. And you see a watch in there. You're like, oh man, that is beautiful. And you're like, I wonder how much this thing is. And then you look down to the right-hand corner and it's got this little asterisk. And what does it say? Call for pricing. You're like, this thing's expensive, right? Because they're not even willing to list the price. I want y'all to think about your business that way. When I say be scarce, like Hitch, be private, like these call for pricing type magazines. We're not just out there blasting everything about what we do with our investments to everybody because they have to earn the right to hear it. How do they earn the right? They prove to us they have a compelling reason. They talk to us about their investment history, what they like, what they don't like, what they're looking for, what their risk tolerance is, what their expectations are. And we've got to figure out if this is mutually the right fit. When you approach capital raising this way, you will draw people to you. You're not asking them for anything. They will want to work with you because they can tell you're not just in it for the check and you're not willing to take their money unless they're a good fit and they can feel that. All right. I know I spent a lot of time on the golden sales rule, but it's important. Create Rolls Royce energy. What does that mean? It plays very well into what I just talked about with call for pricing, but we have to shift the energy at the very beginning of the conversation. Most investors expect to be a passive participant in the conversation where they just kind of sit there and you pull up a slide deck and you do the sales monkey dance, right? And you prove to them why you're so amazing and look at your portfolio and here's why you should do this. And then you brace yourself for objections, and then you overcome objections and you're in this subservient role. That's what I hated about sales. When I got into high ticket sales, my family bought a franchise in Austin of this financial education company. And I got thrown into a sales role very quickly that like I was not prepared for. And it was a massive growth opportunity for me. It's really where my sales career grew and exploded. But I was not prepared for it. And I thought, okay, the entire family's on the payroll here and I got to figure out how to sell this stuff. So I went to corporate for sales training. And I remember thinking like, okay, this is going to be fine. They're going to teach me how to sell. And I went to corporate and I had the biggest pit in my stomach on the first day of sales training because it was all of the cheesy old school type tactics. And I'm going to give you all an example of this and you're going to cringe. But I remember the trainer saying, here's how you handle the spouse objection. It's all about handling objections. And in our world, it was the spouse that would object to this because our education was expensive. It was $15,000 to $75,000. Guys that came in, it was mostly men, had already blown up 2 or 3 trading accounts. They already lost $100,000. Now they want to spend money to learn how to do it the right way from professionals that trade in this space. And so it was usually the spouse that was like, no way you're spending that money. So it was like, how do I overcome the wife objection, the spouse objection? And I kid you not, the trainer said, what I love to do, and I asked this question and it works really well, is I ask him with a smile on my face, well, John, did you follow her down the aisle too? And the worst part about it, are you cringing yet? Hopefully you understand how horrible this is. The worst part about it is I was looking around, everybody's like, oh man, that's so good. And they're like writing this down. And I'm like, this is insanity. Like, I'm going to have to figure this out on my own. There is no way that I'm going to treat people like that. People hate salespeople because of this crap. And so I realized I don't want to feel cheap when I'm selling. I don't want to feel cheap when I'm raising capital. I want to feel subservient, less than. Most people treat salespeople less than because of all the bad behaving salespeople out there. So how do we shift the conversation at the very beginning? How do people very quickly see that you don't need their money? And it has to be the right fit. So my favorite way to disarm them and to do that at the beginning is to say something like, John, and I just use John. John's like our go-to prospective investor name. I'll say, John, I got to tell you out of the gate, what we do isn't perfect for everybody. You may love wine, right? And we have a great conversation and you may decide for whatever reason that this just isn't the right fit. If we get to that point, are you okay telling me that? They always say yes. He's like, well, yeah, of course I tell you. I'm like, are you sure you seem like a nice guy? No, I'll tell you if it's not the right fit. I'm like, okay, that's fair. The other side of that is after I understand more about your investing experience, what you're looking for, what you like, what you don't like about your investments, your type of capital you're trying to move, I may decide from my end that it's not the right fit and what we look for in our investor community. And maybe I'm just not the right person to help you. If we get to that point, are you okay if I tell you that? And he's like, well, yeah, I hope you would. I said, absolutely will. If we get to that point, I'll do the best that I can to connect you to maybe another operator, another asset class that could be helpful for you. The third outcome is we have a great conversation, and maybe you realize that what we do could fill a gap in your portfolio. You like the team. We decide that we want to move to the next step. And if we get to that point, we can talk about what those next steps would look like. Are you comfortable with that? You're like, yeah, that sounds great. That's my disarm step. And what it does is you'll notice a physical change in your investors. They take a big deep breath and they relax because they realize you're not here to sell them anything. And you gave them permission to say no. That's what disarm is. Out of the gate, you tell them, if this is not the right fit, are you going to be okay telling me that? Most people stop there. If they learn any type of the strategy, they stop right there. The problem is you're subservient if you stop right there. We also get to say no. That's why it's so important that you say, after I understand your goals, what you're looking for, what you like, what you don't like, and what we look for in our investor community. If maybe I decide it's not the right fit, I'm just not the right person to help you. Are you okay if I tell you that? You have the right to say no. You have the right to not take capital. I have a billionaire still trying to invest in this tech deal, still being demanding. I have the right to not take their capital. So investors, you will set yourself apart and they will be drawn to what you want to do because you're not just in it for the check. Now, here's the thing. Sometimes you need the money. How many of y'all are in the middle of a raise and you're like, how do I act like I don't need the money when I actually need the money? Okay. I need the money right now. I got to get 20 million in before Thanksgiving. I need the money. But I turned down a billionaire. Why? It's not the right fit. And I have the right to do that. And the more that you respect yourself, the more investors will respect you too. We're not sales monkeys out there just taking checks and doing everything investors want. And they send you an email with 20 questions and you spend an hour and a half answering that email, sending it back, and they're still not ready to invest. Now they got to run it by their CPA, run it through their, proprietary Excel spreadsheet for their investments. And we spent all this time doing everything the prospective investor asked us to do. We have to have respect for ourselves and our business. So, little side note, if an investor ever sends you an email with like 30 questions about the deal, they're probably if y'all have ever learned DISC personality types, they are a conscientious type personality. They're probably an engineer, IT background, something that's very analytical, calculated, mathematical. Like those are the types of investors who are going to send you questions. That's fine. I don't want you answering those questions until you play out what happens after that. So I'd say, hey, John, really appreciate this list of questions. I can tell you put a lot of time into it, and it's obvious that you're very intentional about where you place your funds. I'd be happy to answer these in depth. Let me ask you a question. Let's say that I do that. It's probably going to take me 90 minutes and you're happy with my responses and you feel comfortable with it. What do you see happening after that? Right? Play it out. Okay. Because if it's, you answer all these questions, he's like, well, then I would run it through my calculator, send it through my financial advisor. We're not answering those questions yet. Let them go talk to all their other people first. I'm just trying to help y'all protect your time. It's a lot easier to protect your time when you look at yourself like a Rolls-Royce dealership, not the used car lot. That's what I mean by the Rolls-Royce dealership. There's no salespeople on the floor. You can't even talk to somebody unless you make an appointment. It's not the same as a used car lot. So that mindset is like, they're lucky to invest with me. I'm bringing them an incredible opportunity. They can't get into it otherwise. I spent a lot of time. I spent a lot of money. I've taken a lot of risk in my business to put together this fund, to put together this opportunity. I have hard money on the line. I'm only presenting it to people that prove to me they have the problems that I fix. And I believe they're the right fit for my investor community. And I like their risk tolerance. I like their mindset when it comes to investing. So you never need the money. You've got to get your head in the game before you go into a raise, which is my last point. What is your bounce back rate? The thing that separates people that raise money for a long time and those that throw in the towel early is their ability to work on what goes on between their ears. I can teach you every sales strategy in the world, but if you don't work on your own head trash and what you believe to be true about your business, your market, the economy, your investors, none of it is going to work. I had salespeople on my team that could teach sales training for me, right? They were like a replica of me. They could go teach it for me, but they couldn't close deals. And it's because they didn't feel worthy. They got triggered by certain investors that were higher net worth than them. They had different personality types. They couldn't get out of their own head. They'd start spiraling from one perceived failure, one deal that went south. All of a sudden they're spiraling. And I'm going to tell you what my own coach told me. She said, they don't serve champagne at pity parties, so don't stay too long. How many of y'all have had a disappointment in your capital raising life or your investment business in the last 6 months? Drop a yes in the chat. How many of y'all have had a disappointment? Yes, right? Especially this this economy that we're in right now, there's some tough things happening, right? It's rough out there. Yeah, Dustin said last week, right? When you're in the trenches, you're going to have these disappointments. This stuff's going to happen. You're going to think that you have your deal locked in. You got a $500,000 investor and you're like, yeah, that one's done. And they say no, and they pull out and you're like, shoot, now I have this massive gap. This is where it's crucial that you keep your head in the game. This is a picture this is the ocean where I met Sabrina. This is the Caymans. But for me, it's that picture of like peace and abundance of how I want to experience my capital raise and what I want to control in between my ears when I go into it. You'll probably heard of the reptilian brain. If you haven't, you got to do some learning on this crazy brain of ours, because these thoughts that you have in your head, can I really do this? Did I take on too much of a raise? Everybody's going to think I'm stupid. I'm going to let down this general partner that I agreed to do a deal with. I'm going to lose $100,000 in this. Oh my God, oh my God, oh my God, oh my God. And you start spiraling. Everybody has those thoughts. Okay. Everybody does. It's just different head trash going through our brain, depending on who we are. You're not going to get away from it. It's our reptilian brain. It's how God made us. It is designed to, many, many centuries ago, keep us alive when saber-toothed tigers were chasing us. That's what the reptilian brain is. It perceives a threat and it starts telling you there's danger here, and you start questioning yourself and doubting. We're not running from saber-toothed tigers anymore, but as entrepreneurs, we get into fight or flight so fast. And the problem is we have to very quickly realize that and get out of it as quickly as possible and get back in the game. I was raising a lot of money last year for this tech company, and we were trying to hit $25 million by August. And we had the whole thing planned out. We were like, it's going to be easy, right? We got this. And June, 15 million, we tapped out. My business partner and I were freaking out. We were on the balcony of a hotel in Miami looking at the ocean. And we were like, oh my God, because all of these big check writers that we thought were slam dunks, like, of course they're going to do this. None of them came in, not one of them. And we thought we were completely tapped out at 15 million. And so we started looking at each other and we were like, oh my God, what are we going to do? And we very quickly caught ourselves, right? Why? Because it's a practice. You have to hear what's happening in your head and realize those are not my thoughts. If you can hear the thoughts going through your head and separate yourself and say, those are not my thoughts, that survival brain, let me separate myself from that. And we looked at each other and we're like, grab the affirmations. Okay. Now I'm not into woo-woo stuff. I'm not like, I've never been that girl, but I have been through enough seasons in my life, enough valleys in my life to realize that your success relies upon how much you work on what goes on between your ears. And so what got us across the finish line was getting our head back in the game. And our affirmations were, this raise will overfund with ease and speed. I don't care what the scoreboard looks like. I'm a fourth quarter champion. I always win. I never lose. I always win. We had these on our phone, and I'm sure our neighbors thought we were crazy because we were standing on the balcony and we were like, we were saying it with conviction, right? We're like, money flows to me easily and effortlessly from multiple sources in increasing quantities every single day. I was looking at the ocean. I'm like, as waves roll into the shore, money flows into this account. Y'all, money wasn't flowing. It was at a complete halt and we were freaking out. But the only way that you get out of that is you have to retrain your brain and say, these are not my thoughts. It's survival brain. And this is the only thing that's going to get me back in the game, is deciding what I believe to be true about myself, what I'm capable of. People that don't do this throw in the towel. They throw in the towel and they say, well, you know, we did really well. Like, we raised 15 million in a short amount of time. This is crazy. And you start, you know, it's like a cute quit. Like, it's a version of quitting, but it's like, you make it sound like it was a good thing. It was a cute quit. That's what people do. They throw in the towel. And then you never look yourself in the mirror and know what you're really capable of. And you don't trust yourself to follow through when you throw in the towel. So when I say don't freak out in the middle, what I mean is that when you start a raise, money's going to come in from your high D personality types, your quick decision makers that say yes, very quick, they move money. That's going to come in early on. And then money's going to flow in at the end, and it gets eerily quiet in the middle. And it doesn't mean that money's not moving. It means every conversation you have, every time you pick up the phone, every text message you send, every email you send, you are warming investors up. Just picture them in the crock pot. Okay. They're just warming up to getting to a yes, but you can't freak out in the middle. And if y'all don't have affirmations or, you know, beliefs, I've got a whole list. Just shoot me a message on LinkedIn. I'll send you my affirmations. Sometimes I tweak them for each raise, but it's the only thing that's ever helped me keep my head in the game, was realizing what I'm capable of. If you tell yourself, I always win, you will find a way to win. I borrowed that from the founder of this tech company that I'm raising for, who's a Silicon Valley multi-billion-dollar track record. And we were at lunch one day and he just said something. And I was like, that forever changed my life. And I asked him a question. He was like, I never lose. I always win. And I was just like, huh, interesting. Interesting that he believes that to be true about himself. If you believe that to be true about yourself, you will do what it takes. You will push through. And y'all, I'm telling you, at the end of that raise, investors came in, they doubled their investment amount. People that said no were coming in. Why? Because we took bold action. We didn't throw in the towel. We're like, come hell or high water, we're figuring this thing out. Because the success of your raise is decided at the very beginning. It's not, let me see how it's going to go. It is a decision before you start. I'm going to raise $5 million for this investment by this date. It is a decision. And when you make that decision, you will follow through with the action to get to the result. And it's going to get crazy in the meantime. It's going to get crazy in the middle. You're going to have disappointments. Things are not going to go the way you thought it was going to go. You can't let yourself start spiraling. As quick as you can, snap yourself out of it and change your thoughts of what's going between your head. So one last thing I'm going to share with you is it's not a poem or a quote. It's from our dear friend Teddy Roosevelt. I love it. It's changed my life. I used to have a podcast called Standing in the Arena. But it has created this primary question that I ask myself on a daily basis because I'm in the trenches with y'all. Capital raising is hard. Can we just agree? It's not easy. If you're in this space, sales is hard. This is sales. This is like commission only sales. It's the hardest career out there. You literally could be amazing last month. It's November 1st. What can you do this month? You're starting over from zero. You got to create something from nothing. This is a hard space to be in, which is why it's so crucial. The more you work on your internal dialogue, the higher levels of success you're going to find. All right. It's not the critic who counts. It's not the man who points out how the strong man stumbles or where the doer of deeds could have done them better. The credit belongs to the man or woman who's actually in the arena, whose face is marred by dust and sweat and blood, who strives valiantly, who errs, who comes short again and again, because there is no effort without error and shortcoming. But who does actually strive to do the deeds? Who knows great enthusiasms, the great devotions, who spends himself in a worthy cause, who at the best knows in the end the triumph of high achievement, and who at the worst, if he fails, at least fails while daring greatly, so that his place shall never be with those cold and timid souls who neither know victory nor defeat. And so one of the questions that I ask myself on a daily basis that keeps my head in the game, that keeps me from throwing in the towel is, are you sitting in the stands or are you standing in the arena? And I promise you, the arena is where you grow. It's where you find out the most amazing things about yourself. So I went to a Tony Robbins. I've been to a ton of his events, but it really struck me at his business mastery. He said, the reward of being in business is not like the money and the accolades. It's like, it's who you become in the process. This business is going to test you. There's a lot of very skilled operators in here. You're going through hell right now, and I get it. This business will test you, but it's who you become in the process, and it's staying in the arena. All right. I'm a little over on time, Dustin. I'm sorry. My apologies. I know we want to do time for questions.
No worries. Well, yeah, any questions, you can drop them in the chat, or if you want, unmute yourself and just ask them either way. So, got a few minutes.
Dustin. Daniel here. How are you?
Good. How are you?
Good. Keeley, thank you so much. That was amazing presentation and content. For someone that has not raised one penny in the past, what is the first step? Do I need to work with someone who has raised capital before so that I can, when I introduce myself, I'm like, I'm working with this person, or I guess, yeah, where could I start from scratch?
I love that question. So I think the first step is figuring out, what do you want to raise for, and dive in on that asset class and get to know it really well. And diving into that asset class and making that decision first, you're going to start meeting really good operators like Dustin and Hayden that are probably looking for people to help them raise capital for, and you can lean on their track record. But I think that's your first step. What's the asset class? Get to know it really, really well so you can talk about it comfortably and start building your investor community. Build the money before you need it. Yeah, you bet. Thank you. Good question. Let me stop sharing so we can see each other.
Any other questions for Keeley? You nailed it, Keeley. Trog, did you have one?
Yeah. Hey, Keeley, thanks so much. Great presentation. Just a quick question. I have committed, like you said, to a 10 million raise, and we're sort of getting towards the tail end of that. We have 2.5 weeks or so to finish it. We're at 4 of the 10 million, so we've got a squeeze to go. We thought it would be quite the easy sale. To your point, I am a doctor, and so surrounded by other accredited investors, and so we thought this would be easy to bring folks in, but we're really sort of dragging a little bit. Any advice as to how to sort of springboard very quickly and bring a bunch of capital in?
Yeah, great question. How many live events have you done?
For this particular deal,
Mhm.
just the one with the sponsor that we're working with. We're doing a second one, but it won't be a full webinar, sort of a small Q&A.
Okay. So I'm a big proponent of getting as many live events on the calendar as possible. I know it's more work for us, but I'm telling you, money moves faster when they're live. In that tech raise I went back and counted, and y'all are gonna think this is nuts. You don't have to do this, but we were only allowed to pitch live. So I did close to 80 pitches, and it was like four or five investors at a time. But I noticed when they're live and you can see them and they're engaged, their face is on camera, they can make a decision very quickly. Are they in or are they out? And if you nail your pitch, most of them should be in. If they have the money, you nail your pitch, you should be closing 70 to 80% of those smaller groups that are coming into your webinars. It is hard to chase people down with recordings. It's hard to get them to want to watch the recording. So if I could kind of break y'all out of this framework in our industry of like, do one presentation, send it out, people are not watching it. So if you can get more live events on your calendar, it also gives you a reason to call investors. It gives you something to talk about to get them to that live event. And I would position it from the place of, our entire investor community is very busy. They're very busy professionals. It's the most efficient use of your time to do this thing live. Get in there, get your questions answered so you can give it a red light or a green light. So we've added a couple more live events for that. I would also talk to your existing investors and figure out if you're getting resistance, why? Is it the way that you're pitching the deal? We say things and then you're like, why are they interpreting it like that? Because we understand it, but it might be something about the risk of the deal that they're not getting. It's a piece that you're missing on why you're getting resistance. So I'd go back and evaluate why people are not moving money. I would talk to those investors. And when you call them, you don't want their walls to be up. So I'd say, hey, John, I didn't want anything specific. Like, I know you're not investing in this deal, which is totally fine, right? It doesn't fit your wheelhouse, but I was hoping you could help me with something. When you look at this deal, if you were me, what's missing in it? And get their perspective on why they're not moving money. I would also talk to the people that have already put money into the deal and see if I don't know if you're a 506C, I'm assuming you probably are.
Yep.
Yeah. Make sure your investors know that they can bring their friends and family. Like, they will be your bell ringers. We call them in sales. They will send people to you. Like, I have investors that are like, hey, are you still raising? I've got a couple people I want to send your way. Why? Because we're like, oh my God, you're amazing. Like, thank you so much. Like, we really appreciate you believing in the project, helping us out. Like, they will start selling for you, but we gotta make the ask. Do they know anybody that they think should at least take a look at the opportunity? I would say, John, I really respect your investment mindset. You've got a lot of experience in this space. We're still expanding the cap table of the investors coming into this. I'm just curious. Do you know anybody that you think this should at least get on their radar to check it out?
Yeah, no, solid advice. Really appreciate it. Thank you.
One other thing, Trog, get quiet time, like thinking time, not on your phone. It usually happens when you're on a walk, you're on a jog, you're not doing anything that's related to business. You're not looking at LinkedIn, like you're not doing anything related to business. It will come to you, but you got to give yourself thinking time. It is so hard to do. I'd set a timer of 45 minutes and just sit in your chair.
Yeah.
Look out the window. The answer will come to you.
Sounds very Keith Cunningham.
It
But
is.
Yeah.
Yes. I love Keith Cunningham.
Yeah, it's great. No, I love it.
Yep.
Thank you.
You bet.
Looks like there's a question in the chat.
Yes. Let me see. Bishrant, if I need to raise capital, how can I get started? Show my plan to the investors or make a PowerPoint of what I'm planning to do. I also want to know about people first and building public relations. You have to have something. I'm just not a big fan of PowerPoints, like pitching investors on that. If you can focus on not the investment itself, but you're building an investor community of people that want access to private markets, and you can position it that way where people realize, okay, like, man, like I'm looking at y'all's names in here, like, man, Morgan's like the broker of private deals, not the broker in the professional sense, but if I want to get access to really good deals, I got to go through Morgan. So if you can position yourself that way, right, that you have access to exclusive operators in private markets that most people don't even know exist. Here's some of the types of deals and asset classes that you're evaluating. Here's the types of investors that are coming into your community, and your community is designed just to educate them, number one, on private markets, and to give them access to exclusive deals and operators that they would never know about otherwise. But I think you got to nail down what are your kind of 1 or 2 asset classes you're focusing on first, and start. I hate this phrase because it's so overused in our industry. Start adding value. And I hate it because people are like, what does that mean? What does it mean to add value? But I mean, start teaching them, start putting on some cool virtual events, start bringing in, you know, a CPA, teach them about private markets and how they work, and start building your investor community. Not sending pitch decks out, right? We just don't want them to think you don't want anything from them. You're building, you're giving back, you're pulling together a really cool group of people. If it's, you know, people that are within your career, your profession from the past, that's a great place to start. If I was going to build a community, I'd start with like VPs of sales and chief marketing officers, and it'd be senior level executives in the sales and marketing space that are so overwhelmed, building big careers, want to learn about private markets, don't have time to deal with it. I'm building a really cool community of those types of executives that want to learn more, but are short on time. And we'll do quick little like lunch, like we're doing here, lunch and learns. So start adding value and building that community first. Got to find another phrase for adding value. I don't know why it irks me so much, because it's just overused, I think. And here I am saying it.
Yeah.
May I ask another question?
Yes.
Even though I have not raised any money, I have started following sort of like the sales process. Like different people call it different names, usually some 4-step process. And in that first interaction, that person that I meet at the beach or whatever, I get asked a lot of like, how do you get paid? How do you address objections like that? People are so curious, like about stuff like that, right? Help me understand how you feel stuff like that.
Yeah, no, I would say I make a promote. So I'd explain what that means. I make a promote, or I take a cut of the exit or the profits of the deal, and I make money up front to put the fund together. So I'm what you call a fund manager, if that's your role, right? If you're not an operator, but I'd say I'm what you call a fund manager. There's a lot of expenses and risk that I take on up front to vet operators, to vet deals. There's a lot of attorney type documents that I put together. So I cover my expenses up front, and then I make money on the back end of the deal. Never be shy of that, ever. Right? Like, and I'm not saying you're doing this, but it brings me to another miniature soapbox that I want to share with you, because I care about y'all. I don't want y'all to try to be the Mother Teresa of fund managers. And some of you may not struggle with this, but I had a fund manager that wanted to raise on one of the tech deal that I put together. And this person was doing like 90-10 splits and no minimums and like fees that barely cover their expenses. And I'm like, you can't, that's not a business. You can't make money doing that. There's nothing wrong making money on the front end of putting a deal together. And there's nothing wrong taking a 20% promote or a 30% promote. Now, I don't think anybody in here is egregious or greedy, or you got to be competitive with the market, but we should never be apologetic about our splits. And this fund manager had a friend in his network that put pressure on him, former CFO of a huge company. Again, right, comes back to the people with the big money can sometimes have like, I deserve this and I want that and I want different splits. And so put pressure on him, and he changed his splits to 90-10 for a $100,000 investment and 95-5 for a $250,000 investment. It did not change the returns, like hardly at all for the investor, wiped out all of his profits on the back end. Did this guy invest? What do y'all think? The guy that put pressure on him that made him change his splits to 90-10 and 95-5, did the guy even put money in? No. He didn't. That's why I'm like, there's nothing wrong with making money in this business. Okay. If investors want to go out there and take the risk and fine, they can do that. But that's why they want to be a passive investor. So if the returns are there, we care about delivering results to our investors. That's how you stay in business long-term. There's nothing wrong with making money on it up front. I had in my education background, selling financial education, I had a guy come in and he was like, because we were teaching trading, right? I'm not a trader. My dad is. Forex futures options. My brothers were, but I was selling the education. He's like, well, if y'all make so much money from trading, why do you do this? Like, why are you selling education? they pay me a lot of money to do this. Like I make really good money selling. He's like, oh, that's fair. That's the truth, right? Like there's nothing wrong in that. I'm in sales. I make really good money selling education. And he's like, oh, okay, that makes sense. And he's like, I bet you have a lot of money to put into trading accounts. I'm like, yeah, I do. So we should never shy away from that or like hide it. There's nothing wrong with it. You know, I've done deals where we've got a 50% promote. We've got hard loans on it. We've got recourse debt, signing on it personally. If the returns are there for investors, they understand the story, you have a reputation of delivering results, it's fine. So, you know that phrase of like, say it with your chest? Don't ever shy away from you making money and running and building a big business. Okay, off my soapbox.
Thank you.
Yeah, you bet.
I'll pop in with a question if that's okay.
Yeah.
You mentioned a couple things. So vetting investors, right? And again, like sort of not shying away from, I guess, asking questions. And so a lot of us have been, maybe if we were just starting out, burned on a deal where either the investors hadn't gone full cycle, but they pitched a great pitch. And so now you're doing some triage with investors, right? And so how do you handle that, right? How do you kind of vet, first of all, and then how do you triage investors that are maybe in a deal that isn't paying out yet or things like that?
Great question. So I think a lot of people in our industry are understanding the questions they should be asking on the front end of investors because of the response or the reaction of investors that are in deals that are struggling. So early on, we need to make sure we're talking about risk up front with people. We don't want investors, like I'll use my vineyards as an example. I don't want nervous Nelly investors that are watching the weather in Lubbock. We get really bad hail out there, hailstorms that'll knock a ton of fruit off our vines. And it could take our returns from 15% one year down to 11. That's going to happen. So I tell them that up front. Let's talk about the risk in agriculture. We can't control the weather. We have really bad hailstorms in Lubbock. So there's going to be some years where we're targeting 17%. We're going to come in at 12. And then maybe the next year we come in at 18 and the next year we come in at 14. Like there's going to be some fluctuation. We have crop insurance in place in case there's ever a catastrophic loss, which I walk them through the snares of what, if that would happen, what it would look like. And it's minimal and not expected, but it's a possibility. So I'm like, walk me through your other investments. You know, this is not treasury. These investments have risk. So talk to me about how you manage and handle risk in your mind and other investments that you've evaluated. I'm very upfront about it because I don't want to deal with somebody calling me like, oh my God, you see there's a hailstorm in Lubbock? Yes. And we're fine. Okay. So
that's on the retail side, right? And then on the on the actual operator side, right? So do you have them run through like a really rigorous process? Are you like, I mean, you look for certain things like they've gone full cycle at least, like a handful of times. What's your vetting process for that side?
Well, we're the operators in that space. So I've only ever raised one time where I'm not the operator, and it's for this tech investment that is extremely risky. Like it's a tech startup. So I told investors, how much money are you willing to light on fire? And it doesn't change your life if you lose it, and don't put in more than that. And that was my, pitch in the beginning. I think with operators, I probably have a different opinion on this. I would not rule out operators that have lost deals. Because I know some people are like, oh, if they've lost a deal, they're out. It's like, well, hang on a second. This is investing. And there's some operators out there that have done every single thing in their power to try and save a deal. And they fell victim to the interest rates, the market, like just bad things happen. So I wouldn't rule those people out. I think my dad taught me this years ago because he's been in business, entrepreneur his whole life. And he said, I'll never partner with somebody who's never lost it all. Because my dad's been through it, right? When I was a kid, went through bankruptcy, lost everything, rebuilt it. And he said, I'll never partner with somebody who's never lost it all or who's never gone through the valley because I don't know who they are when their back's against the wall. I don't know who they are, their character. So don't get swayed by these big portfolios and these big numbers. Like you got to figure out who are these people at their core? What is their character? Walk me through some curveballs and some valleys that you've had and investments that you've done. Like what happened? How did you manage it? I'm looking for people that don't stick their head in the sand. I'm looking for people that run towards danger, right? That run towards the problem, that step up and fix it and communicate and do everything they can to communicate. I think that's the biggest thing. If I'm in a risk and investor community, bringing my people into a deal, I want to know, has this operator been through it? Has their back been against the wall? Do they communicate? Are they honest about things? Are they upfront? Do they hide from it? So for me, it's a character thing. And you can't, that's the hard thing. You're not going to figure that out from one conversation. You got to get to know people. I vetted another tech investment. Okay. So this is the second one I was going to raise for. And I'm talking, these are high profile people, like in the news, CNBC, Bloomberg, high profile Wall Street people. And we vetted this thing for 5 months. We were raising, right? Like I've got millions in the bank, but I'm not sending them a check because we're not there yet. We're not at a point where I'm comfortable with it. And I started seeing some things that I did not like in getting to know these people. Went to their home, had dinner with them, met their family, started seeing some things when some challenges started hitting, questions we were asking. I didn't like the response. I had that gut check. And I think a lot of people are like, oh, it'll be fine, right? These are like high profile people. It'll be fine. And I'm like, no, I've learned enough in my life to know when that gut check is there, you listen to it. And so it cost me a lot of money. I still have a lot of my own money in the deal. I had to pay back fund managers close to 60 grand that had already started their process. And I'm like, hey, we're unwinding this thing. I had to make them whole. I had to make myself whole and all my attorney's docs. So like to not go that far down the path, that was a lesson that I learned this year. I would say pay attention to your gut checks early on and spend time with people and get to know them and ask the hard questions. I think operators are willing to take those hard questions. They want to tell you that, like Hayden and Dustin, they want to tell you about the valleys they've been through, the hell they walk through and the deals they're managing. So just get to know people really well when you're vetting them. I think your investors that you're triaging right now, there's going to be some investors that are never going to invest with you again. If they weren't the right fit from the beginning, they lost money, it's fine. Okay. They're going to be fine. They didn't put their entire net worth into it. I've been in capital raising long enough where I've had investors that have lost money in deals of mine in the past. They still invest with me today. They're still close friends. They still send investors to us because they understood from the beginning, this is investing. It's risk. There's things that can happen. There's things that can go south. So I think it's not letting investors put in more than they should. One of my investors wanted to put 800,000 in one vineyard block, like one 300-acre vineyard, one location. And I was like, I appreciate you trust us that much. And you have a lot of, I'm not comfortable with you putting that much money into one vineyard block. Like, can we talk about spreading this out? Can I introduce you to some oil and gas operators based on what he was looking for? So I think it's also your own like conviction of, you don't need the money. You're not just here to take checks from people. Let's make sure it's the right fit and play it out long-term. You are tethered to investors for the term of the investment. You're tethered. You have to pick up the phone. You got to talk to them. So you want to be thinking about, how do I screen them up front to make sure we're the right fit? How do they understand the risk profile in these investments? The right ones understand risk. The right ones will move forward. Some of you may need to refresh your investor list right now and find some investors that understand risk. A lot of them lose money in the stock market, but there's nobody they can call and yell at in the stock market. But in our world, they can. So maybe they're just not cut out for private markets, and that's okay. So it might be time to refresh the list. I have clients whose investors have lost quite a bit in multifamily, but are investing with them in oil and gas and other type of deals because they understand investing. So just be willing to refresh your list if you have to. Lean into the hard conversations. You're going to make it through. I know some of y'all are probably in the valley right now. I think a lot of people are. You're going to make it through. And it's who you become in the process. These hard conversations will build your character. They'll make you stronger for the bigger arenas that you step into in your future of your business. I know it's kind of a rabbit trail, but hopefully that.
No, that was awesome. Thank you so much.
Yes, of course.
Well, yeah, really appreciate your time, and want to be respectful of your time, Keeley. So yeah, just appreciate everyone. Is there, I don't know if, I can't remember if you had your contact info or the best way to get a hold of you. Obviously we'll send out the recording and all that, so everyone will have that. But yeah, any information you want to kind of give on yourself or, yeah.
Thanks, Dustin. Yeah, I mean, y'all find me on LinkedIn. I've been quiet because I'm in the trenches. I'm raising right now. Everybody's like, where are you? Why aren't you posting on LinkedIn? So I'm a little quiet on LinkedIn right now, but I'm here. I'm raising, but connect with me on there. I definitely check my messages there. And then I send out, I think it's a great email. I think a lot of people love it. Sales tips on capital raising. So if you want on that, you can go to my LinkedIn and it's linked there. And if you can't find it, I'm trying to think through. Just send me a message on LinkedIn. If you want those affirmations, message me on LinkedIn, whatever you need. I'll respond. Thank you for having me, Dustin and Hayden.
You're welcome.
Here.
Yeah. Have a great Wednesday, y'all. See you guys. Take care.
Bye.
Bye.